Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It is Wednesday night here in Asia, Wednesday morning in the States, and Thanksgiving's coming up, and this might be a pretty light day for trading. A lot of people hitting the road early, so keep that in mind if you're trying to put on some heavy-duty positions. Might be a little herky-jerky action here. From my experience, markets usually go up in times like these, kind of edge up, and just be aware of that too. So what we're looking at right now, not a lot of reports coming out today either. So we're just, kind of going to peruse through some of the usual suspects and also look at some of the scanner picks and some of the wild and crazy stocks off the stock twists that I've kind of been looking at and how to possibly trade those crazy animals. But what I want to do is take a look at the 10-year first. And this pertains to some of the other note or bond-related type instruments out there. But, I've boringly talked about this for a long time, that this may be one of the best trades out there right now, and it just doesn't seem to want to go away in my mind. 126.10 unfair highs on the weekly, coupled with that 126.02 on the daily, unfair lows on the daily and unfair highs on the weekly, kind of using that dual time frame inflection point to really leverage again. So we finally had that close yesterday above 126.25. We started moving above. I don't want to miss this trade, so I didn't even wait for a close, and I've been waiting for this to break out for a while, and also been able to buy support down here at the 126.02, 126.10 DMZ area. But it just showed its hand so many times. I did a bunch of free TazTech brief type videos on this, and just been waiting patiently for this to happen. But, the market not even coming off the highs, really, a couple of points here and there. This thing's kind of jumped the gun a little bit. And, if the market ever does pull back, and again, just to bring this into play, this is not saying that the market's going to pull back, by the way, the stock market, that is. And I'm looking at our breadth indicator, and we talked about that a little bit every once in a while. It's something on our scanner, which it's almost, to me, like you discovered plutonium-90 by mistake. It is seriously good information to try to at least eliminate one side of the marketplace when you're trading indices, and the main index I look at is the S&P 500. So it's saying that it's still okay to be long, not okay to be short this thing yet, and that means that the note trade really hasn't had a lot of that help, traditional help, to go up, being that the market would come down. So, it's still just like the yen trade was one of my favorite trades. The note trade's been one of my favorite trades to go up also, and I'm not backing off that. And I think if you're thinking about shorting this at this stage, you're really, really going down the wrong road, possibly. Here's the 240s, where do we kind of regulate this? We really don't have anything to regulate it or even stop us from going long here or staying in this long trade. Here's the 240-minute situation. So we'll have a new profile appear pretty quickly on this 240-minute scene. That'll actually give us new support areas and new breakout areas and new areas to say that, hey, on this particular time frame, if you're letting this regulate the trade up, you might want to say uncle at this point and maybe pick it back up later if we have a lower set that appears. So that's the situation on the 10-year. Let me just hit the 30-year really quick. And here's the weekly unfair highs on this. And, we're migrating above those. 142.30, we're trading pre-market here. 143.06, these are real-time price quotes here I'm showing you. And here's the daily. So right now, the next stop on the 30-year, which we've been talking about, is going to be that 144.01 area. That's my target. I don't see that not happening. Rome wasn't built in a day. This may kind of slide around a little bit, but I think that's the ultimate target that we can kind of count on the upside. And, where do you call it quits? I think right now, if you look at the 240-minute action, we've been kind of on the 30-year, kind of, look, here's support again, here's close above, kind of pull back into support off on the launching pad. I think any type of movement below the 240s at this stage, I know this is a big range, 140, 117, but I think if we have some southward movement here, we're going to have a new profile in the 240s, and then you're going to be able to, kind of possibly accumulate some more at some higher support areas, but also be able to put stops in below those accumulation type inflection points. So that's the situation on the treasuries. We want to talk a little bit about the Australian dollar. We've been talking about being bearish, that thing, and that thing has just completely come unraveled down the downside. So I want to kind of go through the mindset process of why we thought that way, and then now what do you do now? So first of all, though, I want to take a look at crude oil. This is kind of the big commodity that's on everybody's radar screen right now. Here's the weekly situation. If I can get this to pull up. Nothing new there, and really on a long-term basis, it's definitely been okay to be short and not okay to be long. Do have some magenta bars appearing down here, but I'm kind of leaning towards some of the fundamental news out there that, and this is the January contract on crude oil. Excuse me, I'm a little confused today. 74.54 unfair lows on the daily. So, we've kind of had that close below profiles. We've been bearish on this thing, and I know everybody's kind of getting on the bearish bandwagon, which usually means there's a setup for some kind of squeeze play before it actually goes down, because there's some open interest things that people are looking at, things like that, and there's no free lunch with this. So just be aware that we may have, just like in 2008, there was days when the market was up 300 or 400 Dow points in that massive downslide, and that's just the way kind of markets act. So be aware that we may have some spike ups in crude oil, and they could continue for a while. So just make sure you've got some kind of stops in force on the intermediate basis, mine or above, like we talked probably yesterday about 78.48. Based on an appetite for risk there, but I'm going to try to add more shorts at that area, and then call it quits above. And if we can get back down below, then we're back in the game again. But the close below retest of the 74.54, not coming off that very violently actually, but here's the 240 situation to kind of regulate this down. And again, these inflection points are available, and I've got the scanner up right now. I don't have the commodities. Let me see if I can put this up here. See if I can add those things. I'm not on the best connection here, so it may take a little bit of a time. Okay, let's come back to that as soon as it loads. But since we always talk about this. We always talk about weekly takes precedence over daily over 240 on down the road. Even though a lot of our automated trading strategies rely on, the ones that I love the most are the daily trading systems. When I say daily, I mean the daily inflection points, not that we have to have a close on the daily and then kind of reassess things. Those daily inflection points are very, very powerful. And as I look at the daily, this is why I really like this. This is a very good high probability trading opportunity, in my opinion, on the short side with stops above, and then you can kind of reassess things. But those daily strategy trading systems, if you will, on the golds of the world, which that's my favorite system, by the way, because gold is somewhat difficult to trade sometimes. And if you have it automated, all your thoughts in there, it really kind of lets you sit back in the cockpit and just kind of let things happen the way they're supposed to happen with your trading strategy and your mindset. But on our S&Ps, and I've got the hopefully the futures are in here now. Let's see where they're at. Yep, here we go. So as we look at trading strategies in general off daily inflection points, which is why I like that crude oil trade so much, we've incorporated into the S&P strategies the breadth now. So for our own internal trading purposes, just letting you know we're putting our money where our mouth is. And if these particular dials are dialed in to a certain schematic program that we want to see leverage on from the long or short side, it allows us to take an automated strategy and basically eliminate the shorts in this instance. So, what does that mean? That means that if we're trading off daily inflection points and try to pick those high probability areas to pick a battle and put stops around, we're not going to necessarily, in all instances, take the shorts in that particular system, because this, market breadth barometer, if you will, is really allowing us to eliminate the shorts, because those are the riskier trades, and those are the trades that are contra trades against the long-term breadth power, if you will, and that's probably not a smart thing to do. So this is something that we've recently incorporated in. I love it. We've got our own, skin in the game with that one, so to speak. So going back to crude oil, let's just kind of get out of that scene for a second, and let's cover some of the other basic commodity type arrangements that we cover on a day-to-day basis, and we're going to get into this Aussie trade a little bit when we come back after the first break. Gold, if we can get this thing to come up here. Yep, here we go. 1194, this is real-time quotes right now. This is, I hate, gold's kind of nerve-wracking sometimes, because it does, we talk about this a little bit, you got to kind of define what your appetite for risk is on trading around some of these profiles and the major inflection points, this time being the dailies. Gold's a noisy instrument sometimes. So right now, I personally got, this was a little bit too much for me down here yesterday. So to stay in the long trade, you're going to get chopped up a little bit here, but it's not a bad thing, because in my opinion, when gold moves here, possibly on the north side, you're going to be able to kind of recoup a lot of those small stop outs. And if you're playing that game that way, that's, it's just part of it. So right now, you've got a pretty powerful inflection point at 1198. We've got to get a close above there. We haven't had a close above there. It'd be nice to get a close above there, then a retest, and I'm like all in on that one. But right now, it's just a noisy situation, and it's okay to get stopped out and get back in the trade when the time's appropriate. So thanks for hanging in there. First segment, guys. When we come back, I'm going to probably bring in Eddie to take a look at some of these currencies that he's always heavily involved with, and we can hopefully give you some clear sailing, blue sky type arrangements on some of them. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to take a look at some currency trades here. We got about 5 minutes on this segment, and then we're going to get into a couple other things involving the scanner and a couple of stocks on the radar screen that I've been talking about and then wanted to just kind of define for some folks out there. Eddie, are you with us? We've got our partner from Spain on the phone. Are you back in Spain, or are you with us?
I'm back in Spain. I'm back in my office. I'm back in my desk. Everybody, hello, good morning. I'm here, John.
Great. You've been a traveling kind of crazy kind of guy there from London to Moscow back and forth lately. So, hey, I know you kind of are heavily involved with what's going on with the ruble because you've got a couple of big things that you're working on with some folks in Moscow and Hong Kong. But I really wanted to pick your brain about the Australian dollar. Here's a picture of the weekly. I don't know if you're seeing what I'm seeing on the weekly chart from TFNN. And by the way, they've got some awesome new kind of high-definition transmission of the charts finally on TFNN. And it's kind of a night and day from the clarity of what it used to be. So I really commend them on what they've done over there. So, Eddie, you're the currency expert, and I'd like to know where you think this thing could head. Or is this just a fake out from eclipsing 4-year lows in the Australian dollar?
Looking at the charts, what you're displaying, John, this is no-brainer. Anybody can be expert. If I can do it, you can do it. And if our analytics can do it, anybody can do it. Yeah, this is a clear, short opportunity. Actually, it's just evolving as we speak on a weekly basis. Price tried to get the previous week highs and 3 weeks before highs to get into our balance area from below into the into the resistance area, into the supply, former demand, current supply. That's no-brainer right now. They're there today. Actually, as we're speaking today, this is a short, developing, longer-term playing opportunity.
Okay, so what I did is I switched to the daily, and I don't know if you're seeing that yet, but
I've seen.
Okay, so that dual time frame inflection point lineup from 87.26 down to 87.19 on the weekly was where we kind of had that movement below and then that retracement, which is, again, me and you talk about that powerful trade. But, I'm looking at, this little bit divergent situation going on in the daily with our navigator versus the price action. And, I've kind of thrown that to sometimes I hate to say this because everybody doesn't know when to break the rules, but sometimes you got to, look at all things considered. Like you and I talk about all the time, we've talked about the Australian government kind of being behind this move a little bit, the Chinese situation heavily related to it. They're throwing away some tax dollars and things like that with some free trade agreements now going into India. So, this move happened, and this is sitting here like a sore thumb in my book, this navigator divergent situation. So, I know we always talk about this. We've got to look at this with suspect eyes, this latest move down. I thought it was going to move down, but what are your thoughts based on all things considered and this divergence that we're seeing here?
I'm not a big fan of the fundamentals. Reason behind that, John, and other listeners, that fundamentals reflect real value, real fundamental or economical value to any one or another security just for the very short time frame. The rest of the time frame, the human factor, that means price earnings expectations. And expectations is it's a speculation. Nobody can actually know what's going to happen in the future. We're just speculating, and everybody else in the market is speculating and playing in and betting on their expectations, or other way saying on forecasts of the particular market. Therefore, fundamentals, fine. They reflect it for the short term, some kind of ability. Take a look at just going a little bit, expanding the subject. If somebody else say we're waiting for some kind of news, right? And good news happens on the highs. What happens? Market turns around, goes down. What happens when the bad news goes on the lows? On the swing lows or any lows, right? Market turns around, goes up. That means that our analytical tools, our price supply-demand areas, or we call the boxes, right, that allows us to see whether the market is in balance or the market is out of the balance. And what actually happens in the market, everybody else try to follow the trend. And trend is what? Is action, result action of majority. Majority players in this particular market, John,
we've got a break. We've got to take right now. So, folks, we will be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I've got Edmundas Gatinas with us, and he's in Spain, and we're trying to figure out a couple of things with these currencies here. And as I look at these, Eddie, if you're still with us.
Of course I'm here, for sure.
Okay, cool. We just kind of covered the Australian dollar, folks, and you know that kind of trade lately has been very good to me. But we were talking about, and I'm going to pull this up again. We were talking about the divergence pattern here, and I was, using some of the MOs to trade this down. A few of them were technicals, and some of it was fundamental. But Eddie, we were talking about this divergence. If you're seeing this on TFNN TV with the navigator, I know that's not all the pieces of the puzzle, but I didn't really. You started in on some kind of trading 101 with fundamentals there. Were you finished with this?
Yes. Yeah. I think,
okay.
The message is that most of the fundamentals are short-lived, impacting short-lived way at any market, and then technicals take the place. So that's what I'm saying, and going to jump on bandwagon with you right there, that these technicals, what we're seeing, it's supposed, this fundamentals probably it helped, and our momentum indicators or so-called lack or confirmation of the trend, it did signal the possible bounce or potential loss of the market in November 8th into our profile levels, into the likely support areas or demand areas. What I don't like a little bit here, that dollar showed some little resilience of going higher, building the base, and the breakout for 4 days ago and the last Friday, it had to kind of show that the market is strong, and it kept going higher. What that would disconcert me, that this news can be a little bit old news, because this level was known to us 2 weeks ago, actually when the profile built it and initiated first. Now it's kind of old news. You can select that area from just looking simply at the chart. I would believe so that's old news for us, and we knew that those distribution numbers 2 weeks ago. And I would wait to see what the market will do. If it keeps going higher, then we of course will jump on the bandwagon and keep buying it with a stop of our red line of the distribution unfair highs, where the market is at this particular moment. But it's only for the reason that the market did not advance higher after the breakout. That would keeps me actually treating this as old news, and actually I would want to see the action. I would wait and see. I would take a stance, wait and see as far as comes to the dollar.
Okay. That's not a bad attitude to take there. Personally, I'm willing to take a little bit of a shot there, but I think Eddie's going to probably be right when he says be a little patient with this, and let's see some conviction on some other time frames also. I'm pulling up our 240-minute chart on the dollar right now. If we can get this, our Amazon server is just seemingly very sticky right now, but it may be the connection. I'm just hold off. And again, having conviction here would mean getting kind of plowed up through some of these shorter term time frame profiles. Eddie, I want to bring up the S&Ps. We haven't talked a lot about the S&Ps and done a lot of analysis, because the breadth, as you know, you and I are just like, well, the breadth's positive. We ain't going to try to take any stances on the short side right now yet. On the short term, possibly, because we've got the breadth on the 60-minute, the 240, and the daily, and this weekly. But I guess you could call this a pullback, an intraday pullback. But what is your, me and you think the same way on these indices at this stage. What are your gut feelings on the S&Ps here?
A long-term situation is definitely positive, just because of our market breadth signals on the 4 different levels, all positive measures.
Right.
That means price is not finding any selling resistances in there. However, I discovered, I'm watching very closely every day, scrutinizing the market breadth. I did discover one reading which it took my attention on our professional login, on administrative login, which are available to us, the developers of this platform. I noticed that number of stocks being inside of profiles became greater than number of stocks above profiles. That was enough for me to find a reason to believe that we having some kind of possible pause or retracement. Therefore,
and what time frame was that on? What time frame was that on? Of
course, only on the fastest 60-minute chart, John. 60 minutes.
Okay.
And that gave me an idea 2 hours ago that we might having a little slowdown right there, and therefore a strategy would be picking up, using our scanner, select a weak candidates of S&P 500 stocks would be appropriate to have a short-term scalping trade on the downside, or even hedging your long-term portfolio on the upside if you are, I don't know the distribution, but that would be the good idea right now, to adding to your portfolio weak candidates of the S&P 500 stocks, or play a little bit, having in mind that some pause will take the place soon. But that's only for the short term. Long term, I'm with you. We're still long. We're still strong. There's still positive flow of every kind of level. I just have a little bit of, if you want to be proactive, so-called, and take advantage of the information 100%. So some sort of slowdown is coming in, and that is signaled by our market breadth issues. Again, issues are which inside of profiles greater than issues are below the profile, above the profiles.
Right. Okay, so basically, to paraphrase what you're saying, every move usually starts with the shorter time frame. So what Eddie's saying basically is that he's seen some cracks in the armor, if you can call it that, on the very smallest time frames that we even look at. And what that means is that could be the start or the genesis of some form of a rollover. But it's, if you're playing this on a little bit, kind of show me the meat kind of fashion, that you want to see some more evidence and not be kind of ricocheted around with noise, you want to probably just kind of focus on the daily and the weekly as I'm showing right now. So, and Eddie's, he and I are completely on the same page with this, because we're the ones that have done all the studies with this and all the back testing, and we're not really, at this stage of our lives, not really wanting to go against, technical data that really is almost, not biblical, but it's very believable to us, put it that way. So we have really enjoyed doing the research on this, and we hope you guys are going to benefit from it. Eddie, I've got the scanner up right now, and what I wanted to do was take a look at some things. I got the S&P 500 up. I'm going to take the futures off there. And while we're waiting for that to load on this somewhat iffy connection here, let me pull that aside. Let me talk about something else while that's loading here. I'll get the S&Ps out of the way. Thanks, Basil. Basil's looks like he's. Are you signing off today, or no? I don't know if you're doing your show or not today, but thank you, Basil, for saying that. I enjoy your show very, very much, by the way. Hadn't been staying up till wee hours in the morning and watching it every day like I do when I'm in the States, but I love your show. Eddie, I want to pull up a couple of stocks here while the scanner's still kind of getting its act together on this connection. Oh, cool. You're doing the show. Awesome. Let me pull up Ford, which is our, I kind of look at some of the things going on the chatter wires here, and Ford Motor Company obviously is kind of in the wheelhouse of a lot of Twitter type arrangements. And again, I apologize, folks, for having a little bit of connection issues, so I'm not pulling these charts up that fast. But here's the situation on Ford. Again, the longer term inflection points, Eddie, we talk about this all the time, and I really want you to hang around till the last after this break, until the last part of the show. 1470 was that breakout on Ford, and the close above on a weekly. Hasn't really looked back, but let's just take a look at the daily of what's going on here. So remember that number, 1470, and we started having, just like Eddie was talking about, this is kind of one of the reasons I pulled this up, because it kind of proves that the lower term time frames really kind of usually kind of get the ball rolling quickly, and you start seeing some action before you start doing a long-term time frame. So 1434 was that kind of technical pattern breakage on Ford, and then the 1470 was a really good confirmation on the longer-term time frame. So now what do we do? Eddie, you're seeing this just as well as I probably on the daily at this stage, and we've got 1557 sitting here, daily inflection points, unfair highs, and nothing on the weekly. So looking at Navigator, understanding that this is not probably the best performing stock in the S&P 500 or any of the indices that are out there. Looking at Navigator, looking at where we're at here, would you be a buyer of this stock at this stage?
Definitely. 1554, that's a place where we would like to get long. That's the ideal area. And to average long-term investments, so this 1503, 15 even. That would be the bottom of distribution of this particular daily profile. That would be the two entry areas which I would prefer holding the stock for the long time. But as you know, as you pointed, 1427, that was an area of the breakout of very long. Since October 13, our profile on daily unfair highs, that means where resistance or supply. That area became the demand. 1470 is a long-term support, intermediate time support, 1503, aggressive buying right now as we speak. It's undergoing breakout trade above 1537, 1557, right, John? Or 1537.
Yeah, we're going to have to break. If you can hang around, Eddie, that'd be great. And Basil and the rest of the game was saying they've been long forward for a while, and that's probably the longest forward mechanism started. Probably similarly around that breakout of daily profiles and the weekly confirmation. Guys, we will be right back. It's nice to be on the same page.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Eddie, are you still with us?
Here, nothing did happen to me.
Okay.
I'm fine.
Okay, good. A couple of things we were looking at from the scanner recently, and these are just picks right off of there. I personally talked about Facebook, with this kind of action down here. I'm showing it in the TFNN network, I hope. 72.97, 73. We talked about, man, if we can get a close below there, maybe, for the last month or so, this thing has showed its hand as weak in a relatively strong market. It was, on the scanner kind of popping up, but we've kind of, the rising tides lifts all boats kind of thing going on here. We've bounced off those weekly lows, and for guys who were wanting to be long this thing, this was just the opportunity. I was just kind of, saying that if we, might be better to wait until we close below these weekly inflection points. Regardless of what I thought or you thought or whatever, and by the way, now Facebook has powered up, and let me see if we can get this chart up. Man, we're slow today. Powered up through a daily profile, so now 75.03 is going to be support on this because we've kind of rejected the 73 area on the weekly and for lows. We're not going to close below there. But, Eddie, as you see things like this and you see a very small profile that's just started down here, what are your feelings on Facebook? Because this is right out of the scanner. This is why I looked at this, by the way.
I'll refer to, I'm looking still daily, do not change, of course. I'm looking at weekly lows, which you mentioned, 2 weeks, 3 weeks in a row lows, 72, 80, 73 evens. That is a long-term support area, very, very strong. And the people who were trading this particular instrument, which is Facebook, we did have a clear opportunities, very low risk entries at 73 area, which is our weekly lows, which is unfair lows or demand area. As far as the daily, we are seeing the breakouts above 75. And if today's session will secure that area up and close above 75.03, we will have undergoing breakout into the technical possibility of the closing the gap or fast market of our profiles, which is 78 halves, 78 60s. So this is undergoing breakout, weekly supported, daily likely will support 75.03 short-term support area, and the stops below that. 75.03, Facebook's is current support.
Okay, guys, I've got this. Thanks for that, Eddie. I've got the scanner up. I've got this S&P 500. There's quite a few stocks in here. There's over 2,500 instruments now, and not including futures and currencies and ETFs. But I'm going to go to the daily here, and I'm just going to kind of pick things that are sitting on the bottom, and that's going to pick them out for me here. So now, the reason I looked at Facebook the other day is like we've got an opportunity here. So what we're showing right now is we're showing things that are sitting or in the vicinity on the daily, bottoms, which in this market going straight up, these might be the ones to wait for a cave-in or, our own support areas in a pullback that you may want to buy. But again, Laboratory Corp, JP Morgan, UPS. I looked at UPS this morning based on the scanner. And I will pull up UPS really quick. And, this is the kind of season UPS loves. And there we go. Got back into the profile, come back in, and this may be a long opportunity now that we've found support on UPS. Eddie, thank you very much for coming on the show today for as long as you did.
You bet, John. Thanks for having me.
Okay. Guys, have a happy Thanksgiving. Eat a ton. Work out this weekend and be ready for Monday. We'll pick it back up then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.